Welcome to the Nebraska Soybean Board Weekly Market Roundup, being brought to you by Nebraska soybean farmers and their checkoff. I'm Susan Littlefield, and we are going to dive into some tariff chatter because we know just in the last couple of days there's been a lot that has been discussed. We had a WASDE report that came out, and how are we going to do some marketings? And we've got weather issues and a corn market that might not be able to maintain the rallies we've seen, not to mention the drop that finally took place in the cattle complex to kind of finish off a slide that started last week. We got a lot to unpack, so stick around. More's coming up after this.
Meet the champions of innovation in the heart of Nebraska. They're not just farmers, and they nurture more than just crops, pushing boundaries and turning challenges into opportunities. They trade knowledge and know-how, and their dedication doesn't end at harvest. It's in your every bite and every drive. The future of food, fuel, and fiber, and the future of Nebraska starts right here.
Welcome back once again. As you can see, joining me today, we have Mike Zuzolo. Mike is with Global Commodity Analytics. And then we've got Mark Gold with Top Third and StoneX. And gentlemen, I'm excited to have both of you guys on the program because of your in-depth knowledge of what's been happening in this world of tariffs and discussions. And that's where I kind of wanted to start off. And Mike, I'll start with you to kind of give me your thoughts on where we're at tariff-wise and how you see the markets initially reacting.
You know, Susan, I think it's a big issue to realize in agriculture right now that, in my opinion, President Trump's tariff policy, his economic policy, and his foreign policy are pretty much one and the same. And I think that this past week, we saw once again how the trade was fixated on the currencies. Tariff fears increasing caused the dollar and the gold to rally. Tariff fears decreasing, especially at the end of the week after the reciprocity issue was kind of put to bed, gave us fresh lows in the dollar, fresh 8-month highs in the Russian ruble, fresh 3-month highs, I believe it was, in the Brazilian currency. So between the tariff issue that you bring up and then the WASDE report earlier in the week, and the fact that we saw the wheat stocks to use levels globally go down to about 32%, take us down the lowest levels when you factor in demand into stocks, the lowest levels since 2013, 2014. Those are two big things, I think, that allowed the market to finally open up to the upside. And it was very welcome to see that upside because the row crops were starting to struggle.
For you, Mark, what's your takeaway of everything that's happened in the last couple of days?
Well, certainly the tariffs have got everybody's attentions out here. I think the wheat needed to rally. You had, cheap prices out here. You had the funds pretty short. We'd see the rebalancing after the first of the year. And even though the fundamentals at that moment didn't justify it, we saw the funds coming in and starting to cover wheat. And we've had some good news out of Russia that their crop keeps getting shaved. The Indian crop now looks like it's into some trouble. We've got certainly a lot of cold weather in the plains. Any place that doesn't have good snow cover, they're going to be talking about winter kill. They talked about it a week ago. They'll be back again talking about today. Well, we really won't know how bad it is until we get to the next couple of weeks and the agronomists can get in the fields and take a look and see what's going on there. But all that, the funds, the weather, the Russians, the Indians, we were able to push this market up. We actually traded right at the 200-day moving average for the first time, I think, in 6 months. So it was a positive close here today. I would have liked to have seen us close over the 200-day moving average. We missed by a couple of cents, but it was still a pretty good close.
Mark, you brought up something before we started the program, and the three of us were just chatting on the backside, that we still have a month out plus on this tariff discussion with the president, kind of keeping us on our toes per se. So if you look at it from a producer perspective, what do we do? What is the thought pattern I think that we should be in at this point?
Well, as somebody who likes to manage risk rather than speculate out here, we want to take advantage of these rallies. We saw a great rally in the corn market. We've been laying into some old crop. We're pretty much done with old crop corn now. On new crop corn, we've got about 30% sold. We're happy with that at the moment, but if we can get new crop corn up another 15 cents, we'll sell some more up here. The beans, I've been pleading with farmers to take advantage of this rally out here. We know the Brazilians are going to sell it. It seems like every year, this time of year, we see the Brazilians in here We've got a nice price rally. They start pounding it in. The American farmer just keeps on waiting for something better to happen, and the prices slide back down when their hedging is over. So we want them to take advantage of this rally and do something out here.
And Mike as well, besides the tariff discussion this week, we did have a WASDE report that came out. You and I were talking earlier in the day about just the WASDE and tariffs have been kind of put to bed, but we need to really keep some eye on some things as well.
Yeah, and those USDA numbers were pretty friendly for the row crop, Susan, but we didn't get that kind of a price reaction. That's always kind of a red light in my mind, or it's something that's flashing that would say what's going on here, because we saw the world ending stocks for corn and beans both go down pretty nicely. I think corn was below the lowest trade guess, if I remember right, for world ending stocks. And I think what the trade's trying to do right now is get past the South American weather play. It seems like that the weather market and then the price being driven higher because of South American weather is getting dulled, and it's having less reaction in the market. And my South American colleague, I talked with him Friday and asked his opinion on it. And he said, yeah, Mato Grosso is only about 10% behind now in corn planting at this point, roughly 30% right now. They were almost 40% a year ago. And in key parts of Argentina, the crop conditions, as far as poor crop conditions, have dropped from about 50% down to 30%. There's still weather out there, but I think the trade isn't acting like it as much. I think that's a really big point to watch for in the next couple of weeks, kind of dovetailing with what Mark talked about. I'm more of the mindset than ever that the soy complex, especially the new crop soy, needs to be hedged, because we're going to talk a lot about big corn acres. So I really want to give the corn a chance to get a little bit higher with the wheat market if the wheat can keep rallying and swing back around to that before March 1st. But I really want to set my sights on beans in the very short term.
So as we look, any thoughts, Mark, from you as you look at this picture and where we're moving towards March 1st with these markets?
Well, I think the March 31st intentions report is going to be critical. I'm not in the same camp Mike is on the beans. I think when we come in and we see we've got 3-4 million less acres of beans out there, new crop beans have got some upside potential. In the meantime, though, with this Brazilian hedging till we get to the March 31st intentions, I think can push this bean market down. So we've been bearish, the old crop, friendly on the new crop. That spread's moved quite a bit in the last couple of weeks out here. I think it'll continue to act that way. But at some point before the intentions report, I think you've got to be covering whatever you've sold out here and keep the upside open with some call options, because if we lose 3-4 million acres of beans with these carryouts now under 400 million, that we've got a chance, a 10% reduction in the crop makes a huge difference out here. And if we have any kind of El Nino year, we can see prices move higher. And look at the drought that we're seeing all around the country. It's not terrible in a lot of spots yet, but it's hit that cusp where if it starts to move east, we could have a tough growing season. We can't afford to lose those beans. So
you mentioned that, Mark, and I saw a report this morning that it's very dry for this time of year in Michigan, Illinois, where you're at, and in Indiana. So It's already moving eastward.
Yeah, we're not in that bad a shape. We had some really good snows here 2 days ago. But overall, the main drought has been in the Dakotas, Montana, into Nebraska, Oklahoma. So, if that shifts, then we've got a problem. We've got this problem down around southern California, Arizona, Texas, all the way into Florida that's very dry. And if that moves up, we could have a market out here yet. Prices are cheap. Why not?
So for you, Mike, let's look in your backyard, because we got some great winter wheat growing areas, which unfortunately have not had the snow cover in some areas like they want. And now these bitter cold temperatures into next week as well.
Yeah, and we're looking at maybe negative temperatures for lows all the way down to Amarillo, Texas. And I think Mark covered that really, really well as far as the second round of winter kill threat that we really haven't priced in at this point. And I love the fact that we finally got the Russian wheat price up at almost $250 a ton for 12.5% high pro at this point, export price, Susan. That's a welcome change from what we've been dealing with the last year or two. The big thing for me right now that's unquantifiable, kind of like the tariffs, is HPAI. And what is it doing to the global meal demand? What's it doing to the global crush demand? as we get in the second half of the calendar year. And that is an overriding issue with declining livestock numbers too. And we'll start to see hog and cattle numbers probably start to drop pretty substantially after Q2, Q3. So that's a big demand question mark for me when it comes to, I'm hearing really tough stories on some very large egg laying producers back east of the Mississippi, losing 2-3 barns a day at this point when it comes to areas of Indiana, Michigan, and Ohio. And it's a real concern that we're going to lose a lot of livestock domestic demand that I think we got to get ahead of.
And then it brings in that whole consumer confidence and where we're at. Mark, what are you hearing from your perspective within the company as they look at this global food picture?
Well, certainly this bird flu is a serious problem out here. Eggs obviously at record highs out here. It's affecting the cattle market. I think that consumer confidence is a direct result of what we're seeing in the box beef market from 334 down to 315 now. That's a $20 drop in 2 weeks. So I think we're starting to see that, and that's not good. And I agree with Mike that the meal demand, we're crushing an awful lot of beans out here. It's either a record month or it's 10% above what it was a year ago. We're crushing an awful lot of beans. Well, that's great. We need the oil. What are we going to do with this meal? So, I think that's going to be an issue that we have to address down the road. But in the meantime, that keeps me, again, bearish on old crop beans and meal and bullish on the new crop.
Mark, you and I don't talk livestock very often, but the elevator seems to be dropping right now when you look at these futures.
I've been screaming for the last 2 weeks, actually the last month. And I said, when prices were in the 190s, guys, protect it. Spend $3-4, get some protection on it. And then when we rally another 20 or 30 bucks, okay, you lost $3 or $4 on a put, you gained 25 or 30 bucks on the cash, roll it up, spend another $3 or $4 and protect it out here. And, it's when you see these kind of historic prices, you can't assume they're going to continue. Supply and demand still rule these markets. And when you get to historic highs, protecting those high values is well worth it, in my opinion.
What about for you, Mike?
Well, there's no surprise that we're making new 2025 highs in lead month corn as we closed out this week, and we're near the 2025 lows in feeder cattle at 263. I'll be really disappointed next week and the following week if we take that out, given this winter weather that we're dealing with right now. I'm really looking for the feeders to do a lot to support the fat cattle market right now, because between the net length of the funds and the packer margins being so deep in the red, I think they're going to try their very hardest not to buy a lot and try and keep working prices down. So we need the feeders, we need the hogs, and we need Wall Street to support this market.
Well, gentlemen, I wish you both a wonderful day off, per se, come Monday for the President's Day holiday. I'm sure both of you will find a way to kind of look at the world headlines that are happening. And also a quick happy Valentine's Day to you guys.
Happy Valentine's Day to you.
All right. Thanks so much. Of course, joining me today has been Mark Gold and Mike Zuzolo. A quick reminder to everybody, commodity futures and options do involve a substantial risk of loss not suitable to all investors. And information on the show is provided for educational purposes and not intended to influence legislation, government policy, or action. And that has been the Nebraska Soybean Board Weekly Market Roundup.